Good morning, everybody. We are going to work a problem together. So I'm going to actually work in Connect so that you can see me work through. So I don't do this very often, so if I screw something up, be patient with me. We'll figure it out. But this is a pretty much comprehensive problem for journal entries, posting to the ledger, and trial balance. So hopefully working through it together, if you're having trouble understanding, things will be much clearer. So we have a lawn care service. We're going to begin operations in July 2015, and we have these general ledger accounts. So I know that when I'm pulling down journal entries that these are the accounts I'm going to be using. So I have the following transactions on the 18th, 22nd, 23rd, 24th, 25th, 26th, 30th, and 31st. So we're going to have journal entries for each of those days. So this is our first month of operations, so keep that in mind, that we are going to begin operations, and that may have an effect on something that we'll talk about here in a minute. Okay, so let's look at our first transaction on July 18th. Issued 500 shares of capital stock to Patrick Donegan for $1,500. So again, this is how I want you to approach accounting problems. I want you to take it a piece at a time, decide what accounts are being affected how, and then do the journal entry. Okay, because that will make the whole debits and credits thing clearer, and then you don't get lost. Okay, so we're going to issue 500 shares of capital stock for $1,500. So that means that we now have an owner who gave us cash in return for capital stock. So cash is our first account. Cash is an asset. Alice tells us to, and it is increasing, and Alice tells us to increase an asset account is a debit entry. So I need another, so this is double entry accounting system, as you read, so I need another account. So what did I get in return, or what did Patrick get in return for his $1,500 in cash? He got 500 shares of capital stock. So capital stock has to be our second account. Now, if we look at Alice, capital stock is the C in Alice, capital or owner's equity. Capital stock is increasing, therefore we need a credit entry. So now we're going to record that entry. So now that one's done. July 22nd, we're going to purchase office supplies on account for $100. Okay, so the first piece, purchased office supplies. What does that mean? Well, now I have office supplies on hand to allow that I'll use throughout the period. And so I go pull down my menu and I look for office supplies. Sure enough, there they are. So office supplies are an asset because they're going to benefit my future operations. So an asset account, according to Alice, is increasing, so therefore requires a debit entry. So $100 there. So I purchased them on account. That means I have promised to pay for those office supplies, but I have not done so yet. So that creates a liability in the form of accounts payable. Remember, if you can't decide if something's a liability or an account is a liability or not, we're looking for that payable term. That'll tell us that's a liability. So according to Alice, accounts payable is increasing, it's a liability, therefore a credit entry is required. So there's my journal entry for my office supplies. So now I'm going to purchase mowing equipment for $2,000, and I'm going to pay $400 cash and issue a 60-day note payable for the remaining balance. Okay, so again, break these up in chunks. I'm going to purchase mowing equipment. So I go look and find, do I have a mowing equipment account? Sure enough. So what is mowing equipment? Mowing equipment would be an asset. Those are things I'm going to use, resources I'm going to use to benefit my future operations. So my mowing equipment is worth $2,000. So I now have a $2,000 asset in the form of mowing equipment on my balance sheet. So I'm going to pay $400 cash. So I know cash is involved. So I'm going to pull cash down. Cash is an asset account. An asset decreasing is a credit entry according to Alice. So I know I need at least two accounts. $400 is, but here I'm going to need more than two because $400 is not as much as $2,000, so I know I'm missing something, okay? So I go back and look, paid $400 cash, and I issued a 60-day note payable for the remaining balance. So if nothing else, I know I'm dealing with notes payable. And I need $2,000 for my journal entries to balance. I have $400, so the balance has to be $1,600. All right, so July 24th, we are going to pay $25 cash for gasoline, and all this fuel would be used in July. So if we're going to use all of it up, that means it's not in inventory, it's being used up. We know that costs that we incur in generating revenue are expenses. And that fuel, if we don't have fuel, we can't have a lawn service business. So I know that my fuel expense has to be my debit account. According to Alice, that's an expense account is a debit to increase. Our fuel expense have increased. So $25 debit entry. All of the fuel will be used in July, so we know that's an expense. I paid cash. Cash is an asset. To decrease it is a credit entry. All right. So now we are July 25th. We're going to bill Lost Creek Cemetery $150 for mowing services. The entire amount is due July 30th. Okay, take it in chunks. We billed Lost Creek Cemetery $150. So does that mean we got cash? Nope. We extended them credit. They are allowed to pay us in the future, make a promise to pay. Therefore, that is an account receivable. An account receivable is an asset. That asset account is increasing, therefore a debit entry is required. Now, what did I get that $150 promise for? I got it for the services that I rendered as a mowing service, as a yard service. Therefore, that is revenue for me to count from that's what I'm in the business of doing. So revenue is the I in Alice, income or revenue, remember, are synonymous in accounting. So therefore, an income account is increasing. So Alice tells us a credit entry is proper. All right, July 26th. We billed Gulfview Condominiums $200 for mowing services. The entire amount is due August 1st. Frankly, this one's exactly the same. Gulfview Condominiums has promised to pay us in the future, therefore it's an account receivable. That's an asset account. To increase it as a debit entry. And again, this resulted from our services we provided for mowing. Therefore, this is a revenue. Revenue is the I in Alice for income, and to increase it is a credit entry. All right, almost there. On July 30th, we're going to collect $150 from Lost Creek Cemetery for mowing services provided on July 25th. So part of that, so the cemetery is actually paying cash for that promise that they made us on July 25th. So I'm going to receive cash from them, so I know cash has to be involved. They paid me $150. So an asset increasing is a debit entry. And they no longer owe me that $150. So they still have, what was their original? Yep, they actually, it was $150 to start with. Okay. So they no longer owe it, so that account receivable no longer exists. So accounts receivable is an asset account. To decrease it, because remember, they don't owe me that money anymore, so that accounts receivable account has to decrease. So therefore, a credit entry is proper. All right. And the last one, we're going to pay $80 salary to Teddy Grimm for work performed in July. So generally we're looking for something like salaries and wages. This is an expense because we essentially used up human labor. So I'm looking for salaries expense. So I paid Teddy $80. So my expense increased. Therefore, Alice tells me that's a debit entry. Now, I actually paid Teddy. I didn't promise to pay him. I actually paid him. Therefore, cash has to be my second account. Cash is an asset. It's decreasing. Therefore, a credit entry is required. All right. So let's have a look at our general journal. And those are all of our entries. So now we can post to our ledger account. So what I recommend is that you go through step by step and pull each entry individually. Okay. So cash, the first entry, is on July 18th. So I'm going to pull down July 18th. And it was for $1,500 debit entry. Okay. Then on July 23rd, I had a $400, oops. Let's go back to the general journal. Sorry about that. So on July 23rd, I had a $400 credit entry. So, July 23rd, I'm on the credit side of the ledger. I'm going to put that $400 in. July 24th, I had that fuel expense. So I'm going to make that entry. So July 24th, I had a $25 credit entry. And then, so I look July 25th, nothing there for cash. 26th, no. 30th, there's an entry. So I had a $150 debit entry in cash. So I need to go pull down that number. And that was $150. So that takes care of that. And then the last one, so July 31st. I had an $80 credit entry. So adding together my debits, subtracting my credits leaves me with a debit balance in cash of $1,145. Okay. Easy, right? Hopefully you said right. Be excited. If you're bored, I'm a happy camper. Okay, so accounts receivable. July 25th, Sorry, told you that I don't do this very often, so I'm going to try to quit doing that. July 25th, I had a debit entry in accounts receivable. So I'll pull that down, and it was $150. July 26th, I had another debit entry of $200. And then on July 30th, I had a $150 credit entry. So adding my debits and subtracting my credits, I have a $200 debit balance in my accounts receivable. So clients still owe me $200 at the end of July. All right, so office supplies is next. These are all going to go pretty quickly because I don't have very many entries. So I go back and look for my office supplies entries. We just had one, July 22nd. So I'll pull that date down. And our office supplies were $100. Therefore, we have a debit entry or debit balance of $100 in our office supplies. Mowing equipment, we only purchased one time. Going looking at July 23rd, I believe. Yep, July 23rd, mowing equipment. Pull that down. My mowing equipment was $2,000 debit entry. Therefore, I have a $2,000 debit balance. Accounts payable is my next account to go to. So I'm going to look through. I had an accounts payable entry on July 22nd. And it was for, oops, I actually put that on the wrong side. Sorry about that. So there will be no entry there. Hopefully that didn't confuse you. July 22nd, I actually had that $100 credit entry in accounts payable. So I have a $100 credit balance. Notes payable, I had an entry on July 23rd. And it was a $1,600 credit entry. And that was the remainder of my notes payable on that mowing equipment. Capital stock. I only issued capital stock one time. That was on July 18th. And that was in the amount of $1,500. So therefore I have a $1,500 credit balance. Mowing revenue. I billed customers twice. The first was on July 25th, and it was the amount of $150. And then I also provided services July 26th, in the amount of $200. So I have a $350 credit balance in my mowing revenue account. Fuel expense, I only bought fuel one time. That was on July 24th. And it was $25 at the time, so that is a $25 debit entry, and therefore debit balance. So accounts receivable, mowing equipment, notes payable is all done. Salaries expense, let's talk about it for a minute. I only paid my employees one time during the month on July 31st. So they paid him $80, therefore debit entry, and salaries expense has an $80 debit balance. Now, retained earnings, you might find a little confusing. What is my balance in retained earnings going to be? And I say, I don't see anything that has anything to do with retained earnings. Well, if you said that, then you are correct. We do not have any retained earnings. Why is that? If we go look, we began operations in July 2015. What month are we in? July. We're in our first month of operations. Therefore, we cannot possibly have any retained earnings. Retained earnings would have come from a prior period, and therefore would have 0. Let's put it in the proper. So retained earnings would normally carry a credit balance, and therefore we'll put 0 in there. So you are done with posting to the ledger. So now what we need to do is the trial balance. So what we're going to do is very carefully go down and make sure that we get all of our accounts put into our trial balance. So I recommend you just go down vertically that way you can kind of check them off, okay? So the other thing you can do is list them in balance sheet order, and that may be more or less confusing to you. Connect, I don't think, is going to hold you responsible for either one as long as they're all there. So let's actually go through balance sheet order just so we get practice going that way. So remember, cash is almost always at the top, but yeah, usually always. And then accounts receivable. And then we move into generally our inventories. So office supplies. And then our equipment. So we have some mowing equipment. And then accounts payable. So we're out of the assets, now we're into the liabilities. Notes payable is listed after accounts payable. Oops, sorry. I clicked on the right one here. And then capital stock, so our owner's equity. And now retained earnings. Remember, is a subset of owner's equity. So capital stock and retained earnings go hand in hand. And then we move into our income statement accounts. So mowing revenue would be first. And then any expenses. So salaries expense. And then we also had fuel expense. Okay. So now what I'm going to do is transfer each balance. It's either a debit or a credit balance. So looking at my cash account, I had a $1,145 debit balance. Okay. Accounts receivable, go look, $200 debit balance. Office supplies, $100 debit balance. Mowing equipment, a $2,000 debit balance. Accounts payable, a $100 credit balance. Notes payable, a $1,600 credit balance. Capital stock, a $1,500 credit balance. Retained earnings, 0, and normally that carries a credit balance, so we'll leave it on credit side. Mowing revenue, a $350 credit balance. Salaries expense, $80 debit balance. Fuel expense, a $25 debit balance. So what I'm looking for in the trial balance is for my debits and my credits to add up. I'm at $3,550 for both, so I'm in good shape. All right. So you've now seen journalizing, posting to the ledger, and a trial balance. Now remember, the trial balance is limited. It tells us that our debits and credits are equal, but it doesn't give us all good information. Because if I had, say, what if I'd put $1,145 in accounts receivable as opposed to cash, and put $200 in cash as opposed to accounts receivable? Let's go ahead and mess that up. So I'm not correct, am I? Because if I go look at my accounts, those are not the proper balances. But did my debits and credits change? Are they still balanced? Yep. So that does not tell me if I've mixed up accounts that carry the same type of balance. So those are both assets. They both carry debit balances. Transpose them. The trial balance isn't going to tell me that. So remember, the trial balance is limited in that it doesn't give you all the information, tell you that you're correct, but you've at least gone through the first time and you've got debits and credits equal, so the basics of accounting, your accounting are there. So that's what we'll end with for this chapter. And next chapter will be adjusting entries. What happens when some of this stuff changes? So we'll change our journal entries as transactions change, and then we'll do another trial balance. That's called our adjusted trial balance. So have a great rest of the week, and I will talk to you soon. Bye.